Welcome back, my dear class 11 student. So we have last class we discussed about what is provision and what is reserve. Now under reserve we also discuss what are the different type of reserve we can create in an organization or a company, and what are the different type of provision and what are the example of provision, why we actually make provision, why we make reserve, for whom we make reserve, or what whom we make provision, and what is reserve fund. That is also discussed in last class. Today we will discuss about what are the difference. First we discussed about what are the difference between provision and reserve. Difference between provision and reserve. Difference between provision and reserve. Now make two column. The left side is provision and right side is reserve. Now first point, what is the difference? Now first difference is very important, that is provision is actually charge against profit. Provision is charge against profit. Charge against profit, I already discussed. Charge against profit means the organization earning profit or not, organization earning profit or not, you have to make provision. So provision should be compulsory, just like provision for taxation, just like provision for depreciation. If there is any fixed asset, you have to charge depreciation upon that. So that is the provision for depreciation. So that is your company or organization is making profit or not, that is not important. What is important, you have to charge. If there is a loss also, you have to charge. You have to make provision for the particular period. Okay. Now what is reserve? Now, reserve is appropriation of profit. Number one, reserve is appropriation of profit. Appropriation of profit. Now, what is appropriation of profit? Appropriation of profit means only you have a profit, the company makes profit, only then you can make reserve. Because appropriation of profit means from profit you are actually, there is some amount of profit you are set aside, and from that you are making reserve. Okay, so making reserve, it is compulsory to make profit for the organization, but provision is not that. If you are making loss, then also you have to make provision. So provision is a compulsory, reserve is not. Reserve is not compulsory. Okay. Second is as per purpose. What is the purpose of provision? So it is created for a known liability or expense, known liability or expense to current accounting period. To current accounting period. The amount of which is not certain. The amount which is not certain. Just like, take an example, I also discussed when I first discussed about provision for taxation. So tax is obvious, you have to pay it. Okay, for that you are started to make provision, so that end of the year you should not have that type of body that I have to pay lots of taxes. So for that you are whole year you are making provision for taxation, and but what is the total tax amount, that is depend upon on your profit, whatever profit you are making, on the basis of that you have to pay the taxes to government. So that is known that you have to actually make profit and you have to pay tax. But what is the actual amount of profit and what amount of tax against that you have to pay, that is you do not know. For that you are making provision. So that's why I had saying it is created for a known liability or expense to current accounting period, but the amount of which is not certain. So amount is not certain, but there would be definitely some liability in the future, you know that is known liability. Another example is, if there is a fixed asset, you know you have to make depreciation, that is known liability. Okay. For that you are making provision, because after 10 years whenever you need to purchase a machine, from that amount at that time, so some of you are not actually some of your amount is already you have deducted from your profit. Okay. And that amount you can use to purchase a new asset, and even whenever you sell, at that time you are making, suppose you are not, I have taken an example that if the machine value is 3 lakh and you are after 5 years you are selling at rupees 1 lakh, so there is a 2 lakh huge loss will come, that will you have to shown in a particular year. That should not happen if you make a provision for depreciation each and every year. Okay. So because from 3 lakh, suppose there is a 1 lakh depreciation you already make, so you can already deducted 1 lakh rupees as a loss, as expenses. So your actual loss will be then 1 lakh. Okay. So that is also a purpose of provision. Now what is the purpose of reserve? So it is made for, number 2, it is made for strengthening strengthening the financial position of the business Some reserves are also mandatory under law. Some reserve are also mandatory under law. Now what they are saying, what is the purpose of reserve? So it is mandatory for strengthening the financial position. So if there is a profit, only then you will make the reserve. So some part of your profit you are set aside for future unknown liability, and that's actually make your companies, as you have a fund or you have a amount, if you suppose you have a account in your account, some whenever your father or mother gets salary, some of part of the salary they actually invested in some particular financial instrument. Okay. Now in that case what happened, actually they actually strengthen their financial position. So same thing in case of company, in case of organization, they also from their profit, they do not actually utilize whole of the profit, some of the profit they actually set aside for future uncertain liabilities, and that is called reserve. Now, they are saying some reserve are also mandatory under law. Now, as per Companies Act 2030, Companies Act actually you learn when you are in class 12. So, is there no concept of companies law? So, still you should know that as per Companies Act 2013, some reserve is compulsory. Actually, I said provision is compulsory. Provisional is compulsory for every case, for every organization. Okay. But as per company laws, there is a certain reserve is compulsory for company only. Now, these are the securities premium reserve. These are the compulsory. Now, debenture redemption reserve. These are compulsory. Now, you can ask me what is securities premium reserve. Now, what type you know share? So, whenever somebody, some company actually issue the share at a premium, suppose their share value will be 100. Actually, nominal value. Suppose the product value is 100, but you are selling is 120. So, there is a 20 rupees profit. So, that profit company, as per Companies Act, you have to set aside as a securities premium reserve account. So, you have to create a reserve that is called securities premium reserve. Now, in case of debenture also, so debenture is also financial instrument sold by the companies only. So, in case of debenture, debenture is a liability you issue, and there is a redemption time, that is after 5 years, after 10 years you have to redeem the total value of debenture. Okay, in that case you have to make debenture redemption reserve. Suppose you are issuing a 10 lakh rupees debenture total. Okay. So, after 5 years you have to redeem this, you have to repay that to the debenture holder. So, for that you have to make for 10 years, you have to make 1 lakh reserve per year as a debenture redemption reserve. Okay. That reserve is also compulsory. Or you can make 2 lakh, whatever, there is a different procedure actually making the redemption reserve. So, these reserve are the compulsory for the company. In class 12, you will learn more elaborately of that topic. What is share, how we will issue the share, what is debenture, how we issue the debenture, what is the debenture redemption procedure, all of that. Now, up to that you should know there is certain reserve is mandatory as per Companies Act 2013. Here you just write as per under law. Okay. Now, come to the point number, third point. So, it reduces taxable profit. It reduces taxable profit. So, you are now actually doing the final accounts. So, under final you see there is a profit and loss account and balance sheet. So, every time if there is a provision, you are charged the provision to where? The debit side of the profit and loss account, and that reduces the profit. So, that is they are saying provision actually reduces the taxable profit, because from profit you have to make you have to pay the taxes. Now, what is reserve? It has no effect on taxable profit. In case of reserve, it has no effect. It has no effect on taxable profit. Because after all the expenses you have made, whatever profit left, from that profit you are set aside some amount for the reserve. So, there is no chance of any, this is not actually expenses, you are creating liability for the unknown liability for the future. Now, come to the number 4, how it present in the balance sheet. That is also you know, because you are doing balance sheet now. That is, it is shown provision, actually it is shown either by way of deduction from the item on the asset, from the asset side for which it is created, from the asset side for which it is created, or in the liability side along with current liabilities, or you can show it in a liability side under current liabilities. Liability side as a liability side of balance sheet, side of as a current liability. Okay. So, how you show in the balance sheet? You can show it from asset, that is, suppose there is a machinery. So, if there is a actually you are making depreciation. So, from directly from asset you can deduct the depreciation amount, or you can as per provision for depreciation you can write in the liability side also, because you see that when there is a for machinery account directly we charge the depreciation, we actually depreciate the whole amount from this machinery account. But when we actually create provision for depreciation account, at that time we do not actually depreciate from the asset value, we actually create a provision for depreciation account. From that account we accumulate depreciation each and every year. Now, how will look show the reserve? Now, it is shown on the liability side after capital amount. It is shown under liability side after capital account, capital amount, after capital amount. Now, after capital you have to write reserve and surplus or reserve. Okay, different reserve actually come in the so reserve is a liability. So, how you actually create the element of what is the element of computation. Now, creation of provision is necessary to ascertain true and fair view of profit and loss and balance sheet. And we said when we discuss about provision, that is under prudence or conservative concept, we actually make provision because we know there is a future loss for as we know there is a chance of a future loss, we started to make provision from now. This is called conservatism principle or prudence principle. So, it must be made even if there is no profit. Okay. But in case of reserve, so generally creation of a reserve is the discretion of a management. Okay. So, if you think, because the whole profit is for the owners, so if you owner think that some of profit part they set aside for the future and meet the future unknown liability, then only they can actually make the reserve. Until or unless there is some reserve that is compulsory as per Companies Act 2013. So, reserve cannot be created unless there are profits. Okay. However, in certain cases law has stipulated for the creation of specific reserves such as debenture, redemption reserve, securities premium reserve, these are the compulsory. Now, number 6 is use for the repayment of dividend. Use of the repayment of dividend. dividend, that is company actually paid the dividend for the share who actually the owner of the company. So it cannot be used for dividend distribution. Provision cannot be used for the dividend distribution. From provision you cannot use this provision for anything. You cannot use for the, you cannot pay the dividend. So it is provision, or it cannot be used for the, it cannot be used for the dividend distribution. And number 6, reserve actually it can be used for dividend distribution. It can be used for dividend distribution. Okay, it can be used for dividend distribution. So these are the major difference between reserve and provision that I have discussed. Now there is another thing is very important, that is what is the difference to the yesterday or last class actually I discussed about different type of reserve, general reserve, specific reserve, capital reserve. There I have said there is two type of reserve mainly, that is one is revenue reserve and one is capital reserve. Now what is the difference between revenue reserve and capital reserve? That is also important. So difference between revenue reserve and capital reserve. Difference between revenue reserve and capital reserve. Okay, what are the main difference we will discuss here. Now first is revenue reserve. Okay, so it is created out of revenue profits which arises out of normal operating activities. When I discuss about reserve or revenue reserve, I told already that it is created from the normal operating activities and of the business, and otherwise available for dividend distribution. And therefore it is also available for dividend distribution, because from reserve we can we have learned we can pay dividend. So what is capital reserve? Now it is created primarily out of capital profit and do not arise out of the normal operating activities. From normal operating activities capital reserve is not arise. Suppose there is a asset, there is a machinery you are using, and after 5 years if you sell the machinery and earn the profit, that is called not a business profit, that is a capital profit. Okay, so that is not your normal business procedure to sell the machinery, so that is your capital profit and not available for dividend distribution. But revenue profit may also be used for this purpose. So in reserve specifically, revenue reserve is actually used for the dividend distribution. Capital reserve is not used for the dividend distribution. Now what is the purpose of revenue reserve and what is the purpose of capital reserve? Now second difference. So it is created, revenue reserve actually created to strengthen the financial position to meet unforeseen contingencies or for some specific purposes. Okay, so as the main reason of creating reserve, that is we created from the revenue reserve. That is what? For the unforeseen Contingencies mean unknown liabilities for the future or some specific purpose. Suppose some of the organization thinks after 5 years we actually make expansion. For that they keep aside some of the profit amount to reserve. So that is from the your revenue, from the revenue reserve, actually purpose to create revenue reserve. And capital reserve generally created for compliance of legal requirements or accounting practices. Okay, as I said in the time of when discuss about difference between provision and reserve. So some of the reserve is compulsory as per Companies Act 2013. What are these? Redemption debenture redemption reserve, that is compulsory. Securities premium reserve, that is compulsory as per law, you have to make that. Okay. Now what is the usage? The usage is a specific revenue reserve can be utilized only for the earmarked purpose, while a general reserve can be utilized for any purpose including distribution of dividend. Now if you make from a revenue reserve for a specific purpose, that is workmen compensation reserve, you make from the revenue reserve, because of any time there is a any things happen or any accident happen for the any worker working in your organization, for that you have from this, for that reserve you want to make compensation. So that is called specific reserve. And there is a other reserve you also get for non-specific, unforeseen or future uncertain liabilities, and that reserve you can use also for the payment of distribution of dividend. Okay. Now what is capital reserve? Uses. It can be utilized for specific purpose as provided in the law in force, that is to return of capital losses or issue of bonus shares. Okay. Now that is one reserve I already told several times, that is securities premium reserve. So securities from premium reserve you can use for issue the bonus share or any capital reserve actually used for the right of capital losses. So if you actually make some profit to selling the machinery, in the same time you can make a loss also. So that time you can use this reserve. So that is the main thing, and that is the main difference between revenue and capital reserve, and that is the end of the chapter also. So all the topic I have already covered and total chapter is completed, that is depreciation, provision and reserve. And I have already give you the syllabus also for the accountancy, and very shortly I will give you the what is the syllabus of BST, business studies. Okay. So thank you for today. This is the end of the class. Okay.